Assalamualaikum warahmatullahi wabarakatuh. This is Ikram. So our group will present about a trend and comparative study of a SIME, DARBY, BERHAD and YTL Corporation BERHAD. First of all, I would like to introduce myself first. My name is Mazatul Shairah. So in Malaysia hosts a many public listed companies on a Bursa Malaysia, representing a various industry. For this analysis, we decide to compare the SIME DARBY, IOI Corporation, SIME BERHAD and YTL Corporations to assess their performance and market positions. Each company excels in a specific sector. For example, SIME DARBY leads in industrial equipment, motors, healthcare, and emphasizing sustainability and global partnership. IOI Corporation focuses on palm oil production and sustainability in the plantation sector. SIME BERHAD is strong in property development and construction, while YTL Corporation specializes in utilities, cement production, and global infrastructure development. So we decide to select the YTL Corporation and SIME DARBY for a further evaluations due to their diversification, international presence, and resilience. This making them standout choices for investment and strategic study. So now I will pass to the next presenter to continue this presentation.
Hi, Assalamualaikum. First of all, my name is Alisa Natasha. So today our group will present about the company SIME DARBY BERHAD and YTL Corporation. First of all, SIME DARBY BERHAD is a prominent Malaysia with a rich history and diverse business operations. SIME DARBY is a diversified company. SIME DARBY was established in 1910 by William Middleton SIME and Harry Darby as SIME DARBY & Co. It initially concentrated on rubber plantations in Malaya. SIME DARBY BERHAD functions as a holding company for investment, plantation, property, motors, industrial, energy and utilities, general trading, services and others are the 6 businesses into which the group's primary operations are separated through its subsidiaries. The one of headquarters of SIME DARBY BERHAD is located at Level 9, Menara SIME DARBY Oasis Corporate Park, Jalan PJU, 1A/2, Arah Damansara, 47301, Petaling Jaya. 3 businesses which are Kumpulan SIME DARBY BERHAD, Golden Hop Plantations BERHAD and Kumpulan Kuitri BERHAD merged to form the corporation in 2007. SIME DARBY was listed in the main market section of Bursa Malaysia. By the 1970s, it had established itself as a leader in the palm oil industry and further solidified its position through strategic acquisitions, including the C5 estate in 1971. Then, one of the biggest corporations in Southeast Asia, SIME DARBY BERHAD has more than 270 companies and operates in more than 18 countries. Firstly, plantations, which is oil palm and rubber, motors, automotive distributions, industrial equipment and real estate development, electricity and last mile utilities are among its main operations. The company activities in Hong Kong, Singapore, and Australia contribute significantly to its enormous revenue generated by overseas market.
Firstly, we're gonna talk about a background company of YTL Corporation BERHAD. So YTL Corporation BERHAD is established in 1955. YTL Corporation BERHAD is integrated infrastructure developer with extensive operation in countries including in Malaysia, Singapore, UK, Australia, France, Indonesia, Japan, the Netherlands, Thailand, and Vietnam. For you all guys want to know if YTL Corporation is amongst the largest company listed the Bursa Malaysian Securities BERHAD, and they have a total asset of 85.8 billion in ringgit Malaysian. The core business of the YTL Group comprise utilities, construction, cement and building materials, and they have many core business in the different countries. The YTL is committed to producing world-class products and service competitive prices. This corporate philosophy has enabled the YTL Group to build up growing customer base of more than 12 billion customers globally over the last 13 years. And for the headquarters of YTL Corporation, they located at Menara YTL 2005 Jalan Bukit Bintang 5500, Kuala Lumpur, Malaysia.
Next, we go to SIME DARBY BERHAD mission and vision. Firstly, the mission of SIME DARBY BERHAD is committed to developing a winning portfolio of sustainable businesses, subscribing to good corporate governance and high ethical value. In addition, the vision is to be leading multinational corporation delivering sustainable value to all stakeholders.
Next, I'm gonna talk about the vision and mission of YTL Corporation Berhad. First of all, for the mission, YTL Berhad want to turn the right thing and the right thing into lasting values. In addition, for the mission, they want to produce world-class products and services at competitive price, enabling the company to serve a growing global customer base.
Next, the company core businesses consist of and serve industrial, motors, logistics, healthcare, insurance, and retail segments. The motor divisions provide after-sales services in addition to importing, assembling, distributing, retailing, and renting automobiles. The logistics department distributes clean water and oversees port infrastructure. The business operates in Southeast Asia, Malaysia, China, Singapore, and Australia. Then, SIME DARBY is a leader in the industrial sector, specializing in selling and renting heavy equipment. This section also provides a wide selection of construction equipment like bulldozers, post-purchase services including upkeep and repairs. In the automobile industry, SIME DARBY also one of Asia Pacific top automotive conglomerates. The business imports, assembles, distributes, retails, and rents automobiles among other aspects of the automotive industry. Through its joint venture with Ramsay Healthcare, SIME DARBY has established a presence in the healthcare sector. This section focuses on using clinics and hospitals to deliver high-quality healthcare services. Next, the insurance division adds another layer of diversification to SIME DARBY's business model by offering a range of insurance products through its broking services and others. In all aspects of its business operations, SIME DARBY Berhad prioritizes sustainability.
Next, we're gonna move to core activities of YTL Corporation. This group has 9 core activities of YTL Corporation in 9 different countries. For the first, YTL Corporation has involved in utilities activities. They have owned stakes in waxes, water, and they do have a YTL Communication, and this group have PT Jawa Power in Indonesia. Next, in operation and maintenance activities, this group have a capital base with strong project development and management, credentials, and deep pool of technical and operation expertise, and carries out a wide range of O&M activities. The YTL provides power station and O&M service in the Southeast Asian region, and they have involved in the high-speed rail link between KL Central Station and KL International Airports. Next, YTL involved in cement manufacturing activities that recognized as the nation's pioneer and the largest building materials groups, boasting an extensive network of cement plants, terminals, ready-mix, concentrate patching facilities, dynamic operation, and aggregates. Then YTL involves in construction contracting. They has established itself as a cornerstone as a Malaysian's infrastructure development. Then YTL corporations needs involved in residential property development activities that are undertaken in YTL Land and Develop Berhad. Then they involve in hotels and resorts that in both the ownership and management of these properties, ensuring consistently quality, luxury, authenticity, and service across its portfolio. Then, in technology activities, YTL has a 4G internet that's called YES, and people can use this internet in Malaysian comprise development. Then, YTL Corporation has significant presence in real estate investment trust REIT sector that focus only on investing in hospitality-related properties, including hotels and resorts across various countries. And lastly, YTL Corporation is deeply committed to advancing education, which is YTL Foundation and Frog Asian Syndrome Berhad that's mean the social enterprise that catalyze change in education by doing things differently.
Lastly, we go through the strengths and weaknesses for SIME DARBY BERHAD. SIME DARBY BERHAD has established a strong presence in over 20 countries, particularly in the Asia-Pacific region, employing more than 100,000 people. This extensive geographical footprint not only enhanced the company's market reach, but also allowed it to tap into diverse customer bases and local markets. Another significant strength of SIME DARBY BERHAD is diversified product portfolio, consistently demonstrated a strong financial performance marked by significant growth in revenue and profitability. And the last one is a balanced revenue stream is another critical strength that contributes to its resilience and stability. Not only that, SIME DARBY BERHAD also faces significant challenges due to legal claims that adversely affect the company's brand image. The business has been involved in several legal disputes, most notably with its energy and utility sections. Another weaknesses of SIME DARBY BERHAD is facing significant challenges due to legal claims and fluctuating non-operating revenue stemming from irregular investment and disinvestment operations. And the last one is accused of igniting fires on its Indonesian plantations.
Then I'm gonna present the strengths of YTL Corporation. One of the strengths is YTL Corporation has a wide and comprehensive range of goods and services in many companies that's located in Asia, Europe, and America that provide access to new market and growth opportunities. Then YTL sees further grew after a supernormal profit. For your all information, YTL Corporation reported a supernormal net profit that crossing 1 million in its latest first half financial and surpassing its bottom line in entire previous financial year. Then, the YTL Corporation has strength of amongst Malaysian 20 most valuable brands. The strength of value of the YTL brand lies in its ability to deliver on its promise. It may sound basic, but YTL emphasizes in quality and consistently has won numerous awards and built a brand so strong it and now has 12 million customers on 3 continents. But YTL Corporation has a weakness too. YTL Corporation need to adapt the foreign currency exchange because the risk that the fair values of or future cash flow of financial instrument will fluctuate because of change in foreign exchange rates. The group is exposed to risks arising from various currency exposure, primarily with respect to pounds and dollar Singapore. And lastly, YTL corporations need to adapt the high of full commodity price. This is because this group hedges its full commodity price by the use of derivative instruments against fluctuation in full oil prices which affect the cost of fuel. if the forward full oil price curve is increased by the year and the year. That's all for me, so I'm gonna give to the next presenter. Thank you.
Thank you for our previous presenter for the information given. My name is Shazwana Auni and I will continue the presentation regarding financial ratio by referring on annual report for two chosen company, which is SIME DARBY BERHAD and YTL Corporation BERHAD, starting from 2011 until 2014. So, financial ratio is a simple calculation that compares different numbers from a company's financial statement. It involves four ratios, which are a liquidity ratio, activity ratio, leverage ratio, and lastly, profitability ratio. Each of these ratio is crucial as it has its own importance and use, which help us give a snapshot of the company's financial health. These ratios are used to evaluate the company's financial performance and condition. It helps the stakeholders like investors and also managers to understand different aspects of the company's operation and make any related decision. So firstly, I will explain about the liquidity ratio. So, liquidity ratio refers to financial indicator that assess a company's capacity to fulfill its short-term liabilities using its short-term asset. There is three ratio under liquidity ratio, which is current ratio, quick ratio, and also net working capital ratio. These ratios are crucial for evaluating a company's ability to manage working capital and meet short-term obligation. By comparing this ratio with the industry standards also helps identify competitive standing and areas for any improvement. Firstly, for current ratio, the formula is current asset divided with current liability. So as we could see here, this is the calculation for both company for a period of 4 years. For summarize, in 2011 and 2012, SIME DARBY had stronger liquidity with ratio compared to YTL. However, by 2013 and 14, YTL improved significantly, achieving higher ratio surpassing SIME DARBY. Both companies maintain ratio above 1, indicating a solid short-term financial health. So next, we will proceed with quick ratio, which the formula is current asset minus with prepaid and inventory divided with current liability. In the slide shown the calculation of ratio in 4 years for both company. In this ratio, we could see that from 2011 until 2014, YTL Corporation maintained a better performance than SIME DARBY. It highlights that YTL has better ability to meet short-term obligation without relying on inventory, reflecting stronger financial management and greater flexibility than the SIME DARBY. So lastly, in net working capital ratio, the formula is current assets minus with current liability. Here shown is the calculation for this ratio. So from the table, we could see the summarize that on 2011 and 2012, SIME DARBY had higher value, indicating a better short-term financial management. However, YTL outperformed SIME DARBY in 2013 with higher net working capital, but by 2014, SIME DARBY had lead while YTL figure is declined. Overall, SIME DARBY show more consistent and stronger management of short-term finance. So from this liquidity ratio, we could see from 2011 to 2014, an evaluation of liquidity performance shows that both SIME DARBY BERHAD and YTL Corporation BERHAD maintain a healthy financial standings. YTL indicate a stronger liquid asset management and greater adaptability, providing enhanced financial flexibility and stability. SIME DARBY, despite having acceptable current ratios and generally stronger net working capital, show less progress in its quick ratio, highlighting a dependence on inventory to meet short-term obligation. So SIME DARBY should focus on improving inventory management with a push enhancing cash flow through a better collection process and exploring diversified short-term investment. It could help SIME DARBY to improve its liquidity ratio and reinforce its competitive edge.
So before I talk about the activity ratio of the both company, I would like to introduce myself first. My name is Mazashairah, and right now I will explain about the activity ratio. Activity ratio is a financial tool that evaluates a company's efficiency in using its asset to generate income or manage its operations. Higher activity ratio reflect effective asset utilization and operational performance, while a lower ratio may point to inefficiencies. These metrics are valuable to investors, creditors, and management for analyzing performance, identifying potential improvement, and making strategic decisions. So right now, I will move to the talk about the first ratios in activity ratios, which is inventory turnover ratio. Inventory turnover ratio measures how efficiently a company sells and replenishes its inventory within a given period. It is determined by dividing the cost of a good sold by the average inventory. A high ratios indicate efficient inventory management and a quick sales, while a lower ratios point to a slow-moving goods or excess stock. As you can see in this slide is the calculation of inventory turnover ratio of SIME DARBY and YTL Corporation Berhad. And we can make an interpretation between 2011 and 2014 that YTL Corporation outperformed SIME DARBY in inventory turnover with a ratio 17.1 to 18.6 times. This compared to SIME DARBY 4.3 to 5.1 times. This indicates YTL's stronger inventory and demand management, minimizing excess stock and costs. In contrast, SIME DARBY's lowest in turnover reflect less efficient inventory control and higher operational costs. Overall, YTL demonstrates a superior efficiency and a better market alignment. Next ratio in activity ratio, which is average collection period ratio. The average collection period ratio shows how many days a company collects to payment from a customer after a sale. It's calculated using account receivables and a credit sales. A shorter collection period means the company gets pays faster, improving cash flow. A longer period can mean payment have been delayed, and which might cause cash flow and problem and increases a risk. So as you can see in this slide also, this is a calculation of average collection period. And we can see from the calculations from 2011 to 2014 that SIME DARBY was generally quicker at collecting customer payments than YTL Corporation. While YTL performed better in 2011, SIME DARBY collected payment faster from 2012 and 2014. This shows that SIME DARBY managed its receivable more efficiently and helping to maintain a steady cash flow. And we also have account receivable turnover ratio is in activity ratio. The account receivable turnover ratio measures how well a company collects a customer's payments. It's calculated by dividing net credit sales by average account receivable. A higher ratio means a faster, more efficient collection, improving cash flow and reducing a bad debt risk. A lower ratio suggests slower collections, which can lead to cash flow problems and unpaid invoices. This ratio is essential for evaluating a company's credit practices and financial stability. And for the calculation of account receivable turnover ratio shown in this slide, we can see that between 2011 and 2014, SIME DARBY and YTL Corporation Berhad had a similar account receivable turnover ratio, with the minor differences only. YTL performed slightly better in 2011, while both had identical ratios in 2012, 13, and also 14. SIME DARBY edged ahead. Overall, both companies had a lower turnover ratios, indicating they could improve the speed of collecting customers' payment. Next ratio in activity ratio is fixed asset turnover ratio. The fixed asset turnover ratio measures how well a company uses its fixed asset, like buildings and equipment, to generate a sales. It's calculated by dividing a net sales by average fixed asset. A higher ratio shows efficient asset use and a strong performance, while a lower ratio suggests inefficiency or overinvestment. This ratio helps assess how effectively a company turns its investment into the revenue. You can see in this slide, we have the calculation of the fixed asset turnover ratio. And we can see that from 2011 to 2014, SIME DARBY outperformed YTL Corporation in a fixed asset turnover with the ratios between 3.1 times and 3.4 times, compared to YTL 0.4 to 0.9. This shows SIME DARBY used its assets more efficiently to generate sales, while YTL faced challenges with underutilized assets and declining efficiency. So the last ratio in activity ratio is the total assets turnover ratio. This ratio measures how efficiently a company uses its asset to generate a revenue, calculated by dividing a net sales by average total asset. A higher ratio indicates a strong asset management and operational performance, while a lower ratio suggests inefficiency and underperformance. It's a key metric for evaluating a company's ability to convert assets into revenue. And from the calculation that's shown in this slide, we can see that between 2011 and 2014, SIME DARBY consistently outperformed YTL in total asset turnover. This showing a greater efficiency in generating revenue from its asset. SIME DARBY maintained a ratio of 1.0 times from 2011 to 2013, dipping slightly to 0.9 in 2014, while YTL's ratio stayed much lower, dropping from 0.4 to 0.3. Overall, SIME DARBY demonstrates a stronger asset utilization, while YTL faces a challenge with declining efficiency. For the final interpretation, YTL Corporation Berhad showed a strong inventory turnover from 2011 to 2014, highlighting effective inventory management but struggle with receivables, fixed asset and total asset turnover compared to SIME DARBY Berhad. This issue suggests inefficiencies in asset use and revenue generations. And for the improvement, to improve, YTL should focus on better utilizing or divesting underused asset, tightening credit policies, accelerating payment collection, and aligning inventory management with the cash flow practices. By streamlining operation and adopting a lean strategies and investing in high return projects, YTL can boost efficiency, close the performance gap with the SIME DARBY, and strengthen its financial position.
Assalamualaikum, my name is Nur Sumaya. So I'll proceed our video presentation with the profitability ratio of SIME DARBY and also YTL Corporation. So profitability ratio is a financial metric that evaluates a company's ability to generate earnings in relation to its revenue, assets or equity over a defined period. And this ratio includes gross profit margin ratio, operating profit ratio, net profit margin ratio, return on asset ratio, and also lastly return on equity ratio. So these ratios are important in helping stakeholders to analyze a company's performance over time and against industry peers, and investors also can determine the potential of returns of their investment and how well a company controls its costs relative to its revenues. So I'll start off with the gross profit margin ratio. So gross profit margin ratio is also commonly known to be the gross margin ratio, and it is an important profitability metric that evaluates the percentage of revenue left after subtracting the cost of goods sold. So this ratio offers insights into a company's efficiency in producing its goods and managing production costs. So the higher of the ratios, it indicates that the company retains a greater portion of profit from revenue, and it also can then be utilized to cover the operating expenses, interest, and also other financial obligations. To the analysis that we did of the gross profit margin, as you can see here, YTL Corporation has consistently outshined SIME DARBY in 4 years evaluated and showcase higher gross profit margin. For example, in 2014, YTL Corporation's margin reached an impressive 25.14%, while SIME DARBY's was only 6.25%. This shows that YTL Corporation is more effective at managing their production costs in relation to its sales revenue, and YTL's ability to maintain the margins above 20% throughout the analyzed period prove that they have strong pricing strategy and effective cost control measures, which also contributes to its flexibility in competitive markets. So next is the operating profit ratio. So operating profit ratio is a financial metric that evaluates the percentage of profit a company generates from their core business activities in relation to its net sales. And this ratio offers insights into how well a company is managing its operating expenses and converting sales into profits before considering interest and taxes. And the higher the number of the ratio indicates that the company operates efficiently, retaining more profit from sales, which then indicates effective management of production costs and operational expenses, while on the other hand, a lower operating profit ratio may suggest inefficiencies in cost management or pricing strategies. As you can see here, SIME has outperformed YTL Corporation in 2011 and 2012, and they were able to achieve higher operating profit ratios compared to YTL Corporation. But however, in beginning of 2013, YTL Corporation has started to demonstrate a stronger performance, which led to an impressive operating profit ratio of 14.59% in 2014, while SIME's ratio declined to 9.38%. And the increased operating profit ratios for YTL Corporation in the latter years prove that they have become more effective at managing their operating expenses relative to its sales revenue, and this improvement of YTL Corporation reflects the enhancement of their operational efficiency and likely better cost control measures. Then I'll proceed with the net profit margin ratio. So net profit margin ratio is a financial metric that evaluates the percentage of revenue that remains as profit after all expenses such as operating costs, interest, and tax have been deducted. And this ratio offers an insight into the company's overall profitability and their effectiveness in managing costs in relation to total revenue. And the higher the net profit margin proves that the company retains more profit from revenue, which is typically considered as an indicator of strong financial health and operational efficiency. But however, a lower net profit margin ratio indicates that the company has difficulty controlling its costs or is experiencing pricing pressures, which could result in reduced profitability. Based on what we have analyzed here, YTL Corporation has consistently outperformed SIME in 4 years, and the upraised net profit margins for YTL Corporation prove that they have the effectiveness in converting revenue into actual profit compared to SIME. And for instance, in 2014, YTL's net profit margin has reached an impressive 13.52%, while SIME has declined to just 8.02%. And this shows that YTL was more efficient in managing their costs and retained a larger share of their revenue as profit. So next is the fourth ratio in profitability ratio, which is the return on asset ratio. So this ratio evaluates a company's profitability in relation to its total assets, and it evaluates how effectively the company utilizes its assets to generate profit. This ratio serves as a crucial indicator of both profitability and also operational efficiency. And additionally, it facilitates comparisons among companies within the same industry and helps investors in evaluating relative performance. And generally, a higher ratio percentage indicates effective asset management in generating earnings, making it an attractive factor for investors. In this comparison, SIME has consistently outperformed YTL Corporation across all 4 evaluated years, achieving higher ratio percentages compared to YTL Corporation. And this indicates that SIME was more efficient in converting its asset base into profits during this time frame. But although SIME was able to maintain a higher ratio than YTL in every year, there is a noticeable decline in its ratio from 8.98% in 2011 to only 6.91% in 2014. This may suggest challenges in asset management or profitability of SIME. But while YTL Corporation's ratio being lower than SIME's throughout the year, it has increased from 3.8% in 2011 to 4.27% in 2014. And this proves some improvement in its asset management practices to generate profit. So the last ratio under the profitability ratio is the return on equity ratio. So this ratio measures a company's profitability in relation to its shareholders' equity, and it provides insights into how effectively a company uses the capital invested by its its shareholders to generate profits. And it is also particularly useful for comparing companies within the same industry, as it highlights how effectively the company turn investments into earnings. And the higher number of the ratio indicates that a company is efficient at converting equity investment into profits, which can reflect strong management performance and a successful business model, while a lower ratio percentage proves inefficiencies or difficulties in generating returns on equity capital. As you can see here, SIME Darby has consistently outperformed YTL Corporation in terms of return on equity from 2011 to 2013, and they were able to retain higher percentages during those years compared to YTL Corporation. This shows that SIME Darby was more efficient in utilizing shareholders' investment to generate profits in that period. But however, there is a noticeable decline in its performance, dropping from 15.5% in 2011 to 11.95% in 2014. In contrast, YTL Corporation's performance displayed an upward trend, especially in 2014 when they reached to 13.17%, outshining SIME Darby's declining performance of 11.95%. This improvement proves that YTL has become more adept at generating returns on their equity investment, reflecting an enhanced management performance. For final conclusion of profitability ratio, it reveals that SIME Darby Berhad has consistently demonstrated strong performance compared to YTL Corporation Berhad in various profitability ratios. This outperformance is largely credited to SIME Darby's strong revenue growth and effective resource management strategies. This indicates that investors may view SIME Darby as a more appealing investment opportunity given its strong financial health and operational efficiency. These factors collectively prove that SIME Darby is better positioned in the market, making it a potentially more attractive choice for investors seeking stability and growth. In a nutshell, SIME Darby Berhad and YTL Corporation Berhad has showed a different strength in their financial performance during 2011 to 2014. YTL has managed their liquidity better with higher quick and current ratios, while on the other hand, SIME Darby need to improve their inventory management and cash flow. YTL has strong inventory turnover but struggled to use their assets efficiently, unlike SIME Darby that showed better asset utilization. SIME Darby has lower leverage ratios, indicating they rely less on debt and face less financial risk. But although SIME Darby had higher profitability and better returns on equity, their performance declined slightly over time, which allowed YTL to improve. And overall, SIME Darby was financially stronger, but YTL has showed a promising future growth. So that's all for our video presentation. Thank you.